Hi Dreamers, last week I gave you some interesting ideas to think about diversification in your portfolio beyond the highly concentrated tech stocks that are dominating the stock market right now. And today I wanted to build on that idea with a couple of other ETFs. And so if you haven't had a chance to check out that video and are looking for diversification ideas, take a look. But today I wanted to expound on that idea and look at a couple of ETFs that I haven't seen talked about widely from State Street that basically give you the opportunity to rotate into utilities and healthcare with an income kicker. So let's dig in to these two tickers, XLUI and XLVI. Alright, so let's start out with XLUI, the Utilities Select Sector Premium Income Fund. And so here you can see an expense ratio of 0.35 and the key features right here, that the fund employs an actively managed strategy designed to provide potential current income while maintaining prospects for long-term growth of capital. And that's the part I'm always looking for, funds that provide current income, but not at the expense of longer-term growth as well. It goes on to say that it'll achieve the investment objective by investing in the Utilities Sector Fund, which is essentially XLU, which gives the investor exposure to electric utilities, water utilities, independent power, and renewable energy producers. And so if we scroll down here, we can see it's a relatively new fund, only starting at the end of July of this year, that it has a monthly distribution, and that the current yield is 12.87. We can also see the assets under management. And so as we take a look at the industry exposure, we can see 65% electric utilities, multi-utilities, independent power and renewables at 5%, gas and water. The holdings are basically reflective of the underlying utility sector spider fund. And you can see the top holdings here, which include some of my favorites, like the Southern Company and Duke Energy. And if I go to my Seeking Alpha tool, I can see the current holdings as of 11/18/2025 is the full sector utility fund. And then you can see these options calls, one in December for $92, one in November for $94, and another one in November for $93. So you can see a little bit of a ladder approach off of the base utility sector fund. And before I go into the option strategy that they are employing, let's cover the sister fund in the healthcare sector. So we can see here XLVI has 4.47 million under management, an expense ratio of 0.35, a yield of over 11%. And you can see the industry exposure here with pharmaceuticals, healthcare equipment, biotech, and healthcare providers and services. And if we click into the underlying of XLV, this is essentially the holdings. Lilly, J&J, AbbVie, and so on. And again, in Seeking Alpha, I can see exactly the holdings are simply that sector fund, and then a couple of options being written on top of that. Here's one for November at 147, and here's one for December at 155. So again, a bit of a ladder approach. So I wanted to go into the prospectus a little bit to see what kinds of options they are doing. And here you can see they have one prospectus for all of their income funds around communication services, consumer discretionary and staples, energy, finance, and then the ones I'm talking about, healthcare and utilities, because I think those are two sectors that money might flow into in 2026. But if you're interested in this strategy, you could also check out some of their other income funds. And so as I just pick one of these, since they have a similar approach, as I scroll down, I start to see the coverage of the option strategy. And as they describe it, with respect to the call option portion of the strategy, the fund will systematically sell or write a call option contract that has an expiration date of less than a year, typically 1 to 2 months, which is what I just showed you, with the objective of generating incremental income. The option type that they're using is flex options, which is a customizable exchange-traded contract guaranteed for settlement by the OCC. And so one of the things I wanted to point out here was just a little bit about flex options. And of course, one question that always comes up is, what are the taxes on flex options? And the answer is basically that standard tax rules apply, that the gains or losses from index flex options are generally subject to a 60-40 rule, where 60% of the gain or loss is treated as a long-term capital gain or loss, and 40% is treated as a short-term capital gain or loss. Now, obviously we don't have a lot of time because these recently launched just a few months ago, but you can see the relative total performance so far since July, with the utilities income giving a total return of just over 2%, whereas the S&P had about a 4% total return. And then you can see the healthcare income fund returning just under 10%, so it did pretty well. But the reason why I'm pointing these out is because many of you are looking for steady, safe income generation, and potentially an area that has been oversold and maybe undervalued right now. And so in addition to the equal weighting innovation ideas I covered in that last video, I wanted to add these two to the mix as another way to invest in under-rotated categories like utilities and healthcare with a little bit of an income layer. So for me, I'm starting a position and I'll monitor how these do in 2026. And I'm curious, are you rotating into sectors that underperformed in 2025? Let me know what you think in the comments. Well, that's it for today. I hope you enjoyed this dividend income update. And if you want a richer, real-time experience with me, you can always follow me on Instagram or X. And if you're doing your own research using Seeking Alpha, feel free to find the link below to subscribe if you want, no pressure. As always, I encourage you to do your own research, then implement and learn by putting it into practice. And as a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.